Market Chameleon pre-market show with this man, Mitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with a disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor. Call your broker. That's what they're there for, to give you advice, provide you with guidance. And let me share my screen while I'm doing that. If anyone's joining us for the first time, Will and I, we do this show in the morning to help answer questions you may have about the Market Chameleon tools, data, or analytics. If you want to come on a show and ask your question live, we do provide a link to Zoom. You can click on that link. Once it gets you to Zoom, there's a button, raise your hand. Click on that. Once we let you in, you could ask your question live and direct. If you prefer to type your question, you can do that on the live chat on YouTube. Will's watching it. He'll read it back to me. And while we're waiting for more people to join us and for questions to come in, we'll start out is looking at the pre-market report to see what stocks are trading in pre-market hours, see if we could get some insights there. If we don't get questions, I'm going to move on, maybe continue on the conversations we've been having recently about implied volatilities. We did have some good questions, maybe some that were left over from previous days. So I'll just kind of continue on that and let people, ask questions on those, on the implied volatility. So let's start out with the pre-market report. These are stocks trading in a pre-market hours. I'm going to scroll down here. We got a list of our most active stocks, a list of our biggest percentage gainers, biggest percentage decliners, and we got 51 stocks on a percentage gainers list, 16 on the decliners. So from that perspective, right now we're setting up for a slightly bearish bias at the open. If we take a look at this list, we do see stocks that are small cap stocks. We have ETFs in there. We'll have leverage products, preferred stocks, any stock that's listed on the major U.S. exchange. If it's trading in pre-market hours, it could make this list. And what we could do is start narrowing down this list to a smaller group of stocks. To do that, we could use the filters above. And I'm going to use this one in ETF. Let's click on that. You get a drop down with a list of different ETFs to choose from. We have sector ETFs in there, some broad-based ETFs. The first one, SPY, that's the S&P 500 ETF. Let's click on that. And the list below will get filtered by stocks that are holdings in the SPY, which are the S&P 500 constituents. And here we have 7 stocks made our percentage gainers list, 13 on the decliners. So from that perspective, looks like we're setting up for a more bearish bias at the open. Just looking here, a couple ones that stick out. Google, I think, had a presentation yesterday. They were talking about their AI tools and how they're going to compete with Microsoft and use that AI technology. And I think people are excited about that. We could see that stock up today, 2.6% in a pre-market hours, was up yesterday as well. So that's looking favorably. Disney, I believe they just reported earnings down 5.8%. So this little E, that's letting us know that they just reported earnings either yesterday after the market close or today prior to the market opening, and that stock's trading in pre-market hours after that news. So they're down 5.8%. And I didn't read the full story, but I do believe that there's some, some things that analysts and people didn't like regarding their streaming service, right? So they do have a streaming service that does compete, with Netflix and some of these other streaming apps. So that didn't, I guess there was some disappointment around there, which I don't know. Do you have Hulu, Will?
I don't. We
Okay.
use strictly Netflix, and we're still attached to cable. So we,
Yeah. Well, I'll tell you, Hulu is pretty good. I'm surprised because if you start comparing Hulu to Netflix, and we have both, so we could kind of see side by side which one is better, or how they're progressing. And Hulu's pretty good. I'm like actually surprised that they're not doing better, because they have some interesting programs, and it is Disney. Disney's into that space already, and their app is pretty good. I do think that it's actually a real competitor to Netflix. If you had to sit there and make a choice, I have to pick one or the other, I think it would be a hard choice. So I don't know how people feel about that, but I do believe that it would be a hard choice. And Hulu gives you certain advantages, I think, that Netflix right now doesn't. I think with Hulu, you could actually, eliminate cable and just subscribe to cable through their app. Like the all the news channels, whatever you want in there. I think you could do it right through the app, and I'm not sure you could do that with Netflix. I think Netflix is just,
you got to search for it. It feels like, at least. I mean, maybe they recommend the shows, but
yeah. Well, I think like Hulu, you could get sports in there. You could get your news channels, your MTV.
So it lets you walk through and set up what you want to watch.
Basically. Yeah, you could. Oh, you mean like customize? Yeah, you have like a profile, and it does the same thing. Netflix, recommends things to watch. It pushes. They have new shows that are just Hulu originals, and things that you won't find anywhere else. So they have those exclusive shows on there. But if you upgrade it, I think that you could just eliminate your cable and just go all through Hulu. You could watch your sports, ESPN. You could get, I think you could subscribe even to like other premium, like HBO and so forth. So it's actually a pretty, good competitor, I believe, to Netflix. So I'm surprised that they're not like actually taking more away from Netflix.
Market share, yeah.
Yeah.
And it's interesting because they have like a built-in, network of people they can market to, right?
Yeah.
They have millions of emails, people use their credit cards, people are at their parks. You would think there'd be, multiple ways that they could get people to the service. It is interesting.
Yeah. And look, Amazon is doing, they have Amazon Prime. They're trying to also tap into that market. And they have their own niche, but I would say that Hulu is much closer to a competitor to Netflix. Like there, you really, if you use both apps, and you'd understand, and it would be hard to decide, well, which one. If I have to let one go, it would be hard to decide which one. It's not an obvious choice. If we don't have questions yet, maybe I'll navigate to SPY, and we'll talk about some implied volatility questions we've been getting for the last couple of days. So I think one of the questions we had was, is there an advantage to trading 0 DTE options? Because when we come down here in SPY, we see that one of the most popular options to trade at least option maturities, is the 0DTs, the options that expire same day, right? So the options that expire same day are basically the most popular maturity on the board. And you could see here 4 million contracts traded in SPY in those 0DTEs, 44 point, almost 45% of all the volume. And I think that right now there's this notion, well, then these are all speculators and they don't, they're just gamblers and you should go out further. So there are real advantages that 0DT options have if you have a particular strategy in mind that you can't do with other options. All right. And there are actually real cost savings to doing 0DTs over other options. So we'll discuss those first. When you trade an option that's 0DT, the assumption is that whatever your analysis is intraday on this short-term real-time data, whatever you're analyzing, maybe you're trading an event that's going on that day, like Fed meeting, maybe you're trading the volatility or spread between SPY and a different asset. If you have a strategy that closes out at the end of the day, right? So your balance, whatever risk you have on, that will get taken off at the end of the day. Well, that type of strategy does have advantages. Number one is that you are not using up your capital in a way that's costing you. So think of it this way. If I buy a stock, right? If I buy a stock and I hold it, that means I'm not earning interest on that capital that I purchased the stock, right? That means that while I'm in that stock, that there's an opportunity cost of earning 5% interest right now. Let's say if you just held it in cash. Well, when you're closing out of your position, you're back into cash, your cash balance will earn interest overnight, right? So you're still should be earning the interest overnight because you closed out of that risk intraday. And you're not borrowing money, right? So you're not continuously, if you have a strategy that you have to do on margin, well, if you're carrying it, right, you're paying interest along the way. So here, by going and strategizing and closing out end of day, then you bring down your cost of capital expenses. The other thing that risk you're avoiding, right? Because you're also mitigating some risks, and you're mitigating your risk to overnight events, right? So unpredictable overnight events, and the stock market closes, then you're carrying that risk because you can't really trade out of it. Things are illiquid after hours in the equity market. Options stop trading, and then you got an event that could come out. Any type of event that could potentially move the markets. We don't know. It could happen. Something could happen overseas. Something could happen here. But all of a sudden, you are exposed to more uncertainty, and you have this period of where you cannot access trading in the markets because they're not continuously trading the way they are during regular trading hours. Options close, stocks are illiquid, there's closed periods. So what happens is that you're exposed to more risk, right? More risk that you cannot and that have a lot of unknowns. So by closing out of that position, waiting for the next day, you are mitigating that part of the risk, those gap risks, the unexpected. And there are other things that are mitigating risk, because throughout the day, we could kind of tell what kind of news is expected to come out, right? We know ahead of time if the Fed's going to have an interest rate decision. We know ahead of time, if there's a CPI report. We know ahead of time which stocks are going to report earnings and when. So these are things that intraday we do have more information on the particular day to analyze and strategize around, that you can't do in the longer period of time. The further you go out, then the more uncertainty you have around that data. So there are clear advantages, and then there's other disadvantages around zero DT, but it's not completely crazy to create strategies around zero DT. And you can create strategies that are hedging some of that risk. So even though, you only have one day, but we also can strategize around, other assets that are trading in regular trading hours that will help us mitigate some of that intraday risk. So for example, maybe you're taking a look at the SPY straddle versus the QQQ straddle, right? And maybe those came out of line. So, buying one, selling the other, or buying this versus a basket of stocks that you're looking at. You can do that intraday and close out. So there are tools in there to mitigate risk throughout the day. And even those people who trade options, straddles, let's say you're just trading straddles and you're betting on movement, right? Let's just say in the beginning of the day, the straddle is $2. By midday, it's either decay or move. However, the options themselves are so liquid in this that you don't even need to trade the stock. You could trade and roll your options because you have very liquid options. You have lots of strikes that are close together that you may not, for intraday, you may not need to access the underlying at all. You may just be able to use the options alone to roll your risk or hedge your risk. So lots of reasons why it is logical for people to come into those zero DT options. All right. And, and I mentioned this just because, we get questions about it. There's a lot of volume there. And we do get requests to get tools to help out analyzing those intraday strategies. And we are creating those tools to help out people who are interested in that particular type of trading strategy. So I wanted to kind of mention that, see if there are any follow-up questions regarding that. As far as implied volatility goes, I think we had some good questions when we came out to analyze implied volatility. And the question was, well, if I'm looking at an implied volatility of a particular option, right, how do I measure if that implied volatility for that particular option, is it high or low? Like, do I look at just the 30-day IV? Do I look at the money? How do I measure it? And to measure a particular option, right, a particular option with certain days, trading days to go, certain distance away from the strike price, you would have to find actually an index that measures that particular option. Same distance of, same distance from the strike price, because we see that there is a skew from that to money. Same days to expiration, trading days, because the more trading days we go, the more stock can move, the more uncertainty there is, the less days, the less uncertainty, less days for it to move. So you'd have to find an index for that particular option, that's where this comes in. So if I click on this option, right, I'm going to calculate it here. So here's the payout diagram, but is this IV for this particular option high or low? And this is what it's doing. It's going back in time and saying, here's an option with 7 days of trading. It's 0.6% above the spot price. So create an index. So we're telling the computer, go back in our database and create an index for this specific option. And it's going back in the implied volatility levels for an option that meets these parameters. And it's creating a theoretical value. And then you have, here's the average value for an option similar. It's going back and calculating a theoretical value if we converted those implied volatilities today. Here's the high and low, and then you could compare it to today's. We could change the number of years for the data. So that's using 4 years. We could go 1 year, recalculate it, then we'll get a different value. We could also change the 30-day IV to see if that impacts it. So right now it's on dynamic. So it looks at if we're in a low implied volatility regime, it takes out the highest implied vols. If we're in the high implied volatility period, it'll take the lowest implied vols, or we could look at all results like this. So this is using all implied volatility levels. So you could see here, right now we're on the low end, right? We took IV range, dynamic. So we're still at the low end. Over here, let's do it in a 4-year period. So it's been lower in the last 4 years, but you can see we're below that average. So this is basically taking your IV rank and converting it to the theoretical value of the option to get a better view in numerical terms. How far are we from the average, and where are we in terms of the high-low range? Okay. So I guess there are no questions, Will. I'm just gonna maybe stop right there.
Yeah, that was a great one, D.
Okay.
We're missing Rob hasn't been on. He's been training for, I think, a big bike ride. So a lot of questions usually come through Rob. But anyways, it's been a good week so far of new information, D. Great stuff as always.
So
wait, actually, I see a question just popped up in our sorry about that, D. In our Zoom. We have someone on Zoom. Good morning. Is it possible to do quantitative research and back tests on MarketChameleon? This is actually coming from a Sarush, who was on the IBKR webinar earlier this week.
Yeah, thanks.
Sorry for not seeing that earlier.
So if you're talking about like a customized one, no, a lot of our tools, just like I showed you here, allow you to run analysis based on the history that we show. But if you're talking about like a customized where you're pulling in like an API with, I need this data, and then you're going to run that analysis in those. So it doesn't work like an API where you could programmatically, just grab data from, our entire database, so you can't take our database and copy it over to your database. You wouldn't be able to do it that way. And it depends on, what type of analysis you're trying to run, because it has to be within the framework and parameters that we have available. So if you had, an idea that you wanted to run, it doesn't work like an Excel spreadsheet. It'd have to be just like what I just displayed to you now.
Perfect. All right. No other questions. Thanks for that question on Zoom. I apologize for not getting it earlier. Great job, Dima, as always, my friend.
All right. Well, thanks everyone for joining.
Ooh, actually, another one popped in.
Okay.
He's more like trying to see how a strategy worked in the past. And we're right up against the opening now. Maybe I'll copy that. Maybe we can answer that tomorrow.
Yeah. And we already pre-run how certain strategies would have performed, based on what, like a standardized test that we do like day to day. So like, for example.
Well, why don't we hit on it tomorrow?
Yeah, I'll hit on it tomorrow. So certain strategies we do show, but again, it can be like a customized, something like very customizable, right?
Well, maybe Sarush, you can bring a strategy and we'll look at it tomorrow. How about that?
It could be a common strategy that you would be able to kind of use our tools to see in general how it performed. But again, it depends what you're trying to do. Depends what you're trying to do. So, and some of the tools can get you close to, when you could see with benchmarks, approximately this is how it performed.
All right. Perfect. Awesome job as always. Thanks for the question, Sarush. Have a great day.
An example would be fine. If you gave an example, like for instance, if you gave an example like that, then I'll try to, see if we could do something.
Perfect. Why don't we try that tomorrow, Sarush? Come on. All right.
Okay.
All right, D. Great job.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day. Hope to see you guys tomorrow.
Trading